Forex market, guys, welcome back. Friday, we're closing out the week. We got this overview today on the dollar index, which seems to be collapsing right now as we speak. Guys, take a look at this bearish momentum. It's just really over the top, right? I mean, the last 20-30 days were all about downside move, pretty intense downside move. And yesterday and even today, as you can see, price is edging lower. We last week when we were here, we actually speculated that price might just check on that previous low and then bounce back up, leave just a kind of a similar spike that we had here back at March, and just take that previous low and then bounce back up, leave just a little longer kind of spike here, and then of course turn back up and head straight towards the upper section here. But that doesn't seem to be the case, right? This looks like a legit breakdown for the dollar index. I mean, we can take a look at from this angle, right? This is the monthly chart. So from this angle, right, we're still using the same key level system here, which played out really well ever since, this kind of a trading range started to develop. That was back in 2019. So, I mean, we did had a huge spike around March. That was where the peak, the height of the pandemic hit globally. That's where we saw the dollar index exploding here, but then obviously bouncing back down, remaining inside that range. Now, obviously it might do that a second time here, right? It might bounce back. But it's very, very unlikely, because in a couple of days we're going to close out the month. We're going to have that official closing month. So this looks like a legit breakdown. By the way, you're looking at this green dotted line at 92.3 because we felt that when price started to break 95.23, immediately what we did was we started to prepare for this downside move, and we came up with some targets. This is usually what we like to do whenever we feel that there's a potential breakout, which that's what we felt here, right? When price started to break, then we just went to look for the previous opposite move, right? And we found it here from the very bottom to the very top. Applied 123.6 Fibonacci projection analysis, measurement, if you will put you right here at 92.3. So we believe that's just, obviously that's the next imminent target, and price is closing in pretty rapidly. It's about a hit. Once it does, we're going to be looking very closely on the type of reaction we're going to have here, because we're either going to go beyond to the next one, and then of course we'll have to come up with the next target, which is going to be probably the 161.8 Fibonacci projection, probably around this area, 90. But we might also have a big turnaround, right? Price might stall here a little bit, spike that area a little bit, maybe flirt a little bit here, and then start to turn around, heading straight towards the same key level system. By the way, starting from the bottom here, 95.23, it's going to be it's going to be a turn. It could be a technical correction. It could be a full-fledged upside reversal. We can't know that yet. But I'm just saying, this might be a big tipping point right here at 92.30. So until we hit that level, we just have to be short the US dollar. And that, of course, is going to be reflected with our positioning, right? So, and obviously it is. So we're going to continue to hold positions that are short the US dollar. All right, guys, that's about that for this one. US dollar index. We'll be back next week to follow up on the situation here. That's about that for this. So yeah, let's stay tuned for the next video. Take care.